Hi, I'm here today with Gary, our mortgage broker, and we're really excited today because one thing, the housing market in the Northeast is absolutely roaring. It's been going up month on month. We've seen lots of sales within our estate agency, and I haven't seen a market like this since the financial crash in 2007. There's lots of reasons why our housing market is going up. Some of it was the interest rate cut we had last year. We've got lots of people who've got savings from the accrued savings they've gathered during the lockdowns. There's also been the stamp duty cut, which has chucked some more petrol on the fire. And finally, this month, which is incredibly exciting, which is an incredible big thing in the mortgage market, is they've launched 95% loan to value mortgages. So Gary, what do you think about that?
It's obviously great news, Nigel. Basically, what we're seeing last year is a lot of lenders pulling out of the 90% deals, 95% deals. There was close to just probably about 495% deals last year. Before the government announced this sort of new government mortgage guarantee scheme, we're seeing about 2 or 3 deals available for the first-time buyer 95% deal. So the fact that the government have actually released it on April the 1st, and we've got a dozen or so lenders now who have actually engaged with the government and sort of are going for it. So it's basically encouraging the housing market to actually speed up again, because obviously we had the blip last year, and we're going to be seeing sort of more lenders coming into the market, and it's just going to be good news for the sort of housing market. And typically, what a lot of the questions we're getting asked at this moment in time of clients is, what is the government scheme, how long it's going to last for, and the eligibility. So what I'm going to do this afternoon is just answer a few of those questions. So then we're giving a sort of informed sort of a bit of advice for your sort of clients out there who want to know a little bit more about the 95% deals.
That's brilliant. So Gary, just to explain it simply. So 95% deal means you only need a 5% deposit to purchase a property.
Yeah, that's correct.
Which the government's allowing people who have got those small deposits to get onto the housing market. So traditionally, lenders, I imagine you tell me this, they charge a higher interest rate the lower the deposit, just because it's a more risky loan.
Definitely it is, Nigel. So yes, that's right. So those who are seeking the 95% deals, they're obviously going to be affected and restricted to how many lenders are going to be offering those types of mortgages, the interest rate. And typically what we've got is, a couple of weeks ago, the lenders were just offering sort of 5-year fixed rate deals. We're seeing a couple of more lenders come in now and offering 2-year deals. And generally speaking, those rates are sort of anywhere from sort of 3.73 for the 2-year fixed rate to possibly 4%, just over for a 5-year fixed rate. So they're not the high street sort of headline rate, what some people are getting with a bigger deposit, but it's still a good rate for somebody putting a lower deposit down, and the risk to the lender, for just putting 5% down. So it's a happy medium.
Yeah, because I think one of the big things which has limited the Northeastern market hasn't been affordability, it's been the lack of equity and the lack of the ability to raise deposits. And this kind of solves that problem, which I think is a specific problem within the Northeast, that people haven't been able to raise your 15, 20% deposits. And that's why you've seen a lot of people going into the new build market over the secondary market purchases. So let's talk about that. Is this just for new builds like the old schemes they had, or is this for everyone, or what's the eligibility, Gary?
The eligibility initially, Nigel, was for first-time buyers for what we call second homes, so properties where somebody's already lived in them. Okay. So it's not for people just wanting to buy a new build. It's opening access to terrace, like the older types of properties. People have lived in them, second, third, fourth hand sort of thing. So that was the aim, to open that market up. Now, 1 or 2 lenders have suddenly come in slowly and are offering it to new builds as well. So then clients have got a choice of the second-hand properties and the sort of new builds. But mainly it was to kickstart the second-hand property.
Yeah, because I mean, just to explain that to people, is generally when you went and bought a new build property, they'd sell usually at a premium, and this is just the game new build developers were in for the last few years, and that's why they've earned hundreds of millions of pounds, is they effectively increased their prices by 20%, knowing they were the only low deposit people in town, because the government had various back schemes for new build properties. So the developers overpriced their properties because people would still purchase them at that price because they had a low deposit entry. What this is doing is giving that low deposit entry to me and you selling the home we've got now to a first-time buyer, or our buy-to-lets to a first-time buyer. So it doesn't affect the buy-to-let investor market, but what it does is kickstarts that secondary market, which is one of the problems which has been around in terms of that older stock, that actually you've only seen new builds increase significantly in price because of that. So say, for example, I'm a first-time buyer. Well, no, I don't have to be a first-time buyer. Say I'm just looking for a house. So where would I go to? What lenders? Fixed trackers. What are we looking at, Gary?
So realistically speaking, there's about a dozen lenders. So you've got your main high street that have come into the market, your Halifaxes, your HSBC, your Cord Mortgages, Skipping Building Society, Barclays. You've got one of the smaller building societies, Furnace Building Society. You've got Bank of Ireland as well that have come into the market. So by speaking to somebody like ourselves, a broker, we've got access, and sometimes, Nigel, I've got exclusives.
Oh,
where they're basically only through a broker rather than going direct for the client.
Yeah.
We've got access to some of these deals to help the the first-time buyers getting onto the property market, especially like you said, the second-hand properties, because new builds, you do pay a premium for them. And what we find 2 years, 5 years down the line, you come to remortgage a new build, and sometimes they're either negative equity or they can't remortgage because they've actually paid a premium. Whereas with the second-hand type property, they're getting valued realistically to what the current market is. So the chances are they've got less chance of possibly going into negative equity in the years to come, unless they've been a little bit silly and the emotions have got ahead of themselves and they've paid over, which you're always going to get that in any sort of life or any sort of buy-in. So yeah, we've got access. And I think since it's only been launched in April, we've already got quite a good selection of lenders. It's only going to get better because with the government sort of backing 80% up to 80%. So if somebody puts a 95% deal, the government are backing 15% up to 80%. So if somebody sort of misses the payments or defaults on their mortgage, then the lender's not risking the full 95% of the loan. They're risking the 80% up to 80% of the loan. So they know the government's going to be, they're going to get 15% back of it, Nigel, or plus the 5%, they're going to have 20% equity in that. So I think it's a really good thing, and it just again opens the market for people who don't want to buy a new build. People want to buy houses with character.
Yeah, and like I say, it's to be honest, the schemes the government's had has been, I think they've backed the new build companies because they wanted to create, they wanted more houses being built. But actually what that has done is it's just dumped a load of money within those companies who've just overpriced their houses. Whereas what this is doing actually is more targeted to first-time buyers, because they're generally low deposit type of purchases, because they're saving up for their first deposit and they haven't got any equity built up in their home. So it's more of a targeted for that generation rent to get them into the housing market. And invariably what that means is house prices will move higher because that demand is there and there's less barriers to enter into that market, one of which, and the biggest of which, was the size of the deposit. So I mean, in terms of the different lenders, so Gary was touching on there's various lenders you can go to. Traditionally, I'm a middle-aged man. I go to my bank and say, "Oh, what have you got?" But it's always best to, would you say, Gary, to have a look at the entire market?
Definitely, yeah. You basically, with these 95% deals, all the lenders at this moment in time are looking for sort of what you call your vanilla sort of clientele. People who basically got good jobs, never been affected this last 12 months with COVID, which is a hard thing to say because it has had a massive impact on everybody. Really, really good credit reports, no blips, low credit, sort of outstanding credit, making sure the affordability, and then making sure that the client profile is really, really good and spot on. because obviously they don't want them defaulting, they don't want them sort of losing the houses if like sort of interest rates go over a later date or anything like that. So, and by seeing a broker, we'll research the market and we'll basically say, look, you fit with this or you fit with that. Now, I'll give you an example, Nigel. I had a client, he had been to see another broker, being declined for a 95% deal. They went sort of with another lender, got declined, didn't do the research, and we basically done the research, looked at the client's profile, and we basically said, right, actually, we could put it with this client, this lender, sorry, because the lenders, Nigel, use different credit agencies. They use Equifax, Experian, or TransUnion. And when we get the credit reports of clients, something what's shown in Equifax, there might be the slightest little blip, might be shown on TransUnion. And sometimes it can just get it through with that lender because it fits with that lender rather than that lender. So having the knowledge of a broker to choose which lender it fits with is so important. Now that client has had an offer accepted on a 95% deal yesterday, heartbroken because he couldn't get that property.
Brilliant. That's
so it's just again, and somebody could have went to the bank and the bank just went decline, and that's it, them just thinking they can't do it. So it's very, very important to speak to the whole of market mortgage broker.
Yeah, definitely. And so we're saying this is a brilliant thing for the mortgage market. Is there any disadvantages with these 95% mortgages, Gary?
Yeah, so I would say at this moment in time, like anything in life, there's always a risk. Okay. So property prices can fall as well as rise, which we obviously you have seen over the years and everything. The main risk is, I think, with the way the market is at the moment and the demand and there's agents, you're speaking to agents for you and on behalf of your clients, and you're finding out they haven't got enough properties. They're waiting for properties to come on because the demand is so high, and people are letting their emotions get the better of themselves, and they're paying a premium for some properties that they want. So by just having a 95% mortgage, like a deal with only putting 5%, if a client gets carried away far too much and pays maybe a premium for this property, and in a year, 2 years time, we never know, there's a little sort of, the market sort of steadies itself down and there's a little tiny dip, then they could possibly see themselves in a little bit of negative equity. And I think we've got to get away from people's mentality of thinking, I'm buying a home and I'm going to become a millionaire and this is going to make us fortunes. Because over a length of time it will do, but you've got to see it as a medium to long-term investment, not something. So if it does go down a little bit, stick hold of it and it'll come back up. But yeah, ideally, the bigger the deposit, the sort of less risk it is, both to the client and the bank.
I'd say, yeah, I'd agree. I'd say with these 95% mortgages, there's slightly less risk than when you were going into the new build market, because
Definitely.
like I say, those valuations were always heavy. They were always
20% high. Yeah.
Because there was you couldn't go elsewhere, but it gives you full market, as in full residential market availability up to like a very high ceiling, which doesn't affect the Northeast really, you wouldn't probably use a 95% mortgage if you're going to buy a £500,000, £600,000 house in the Northeast. So it gives you a whole of market, and it gives you that first step onto the housing ladder. But like you say, be responsible, be aware that obviously your name's on the debt.
Yeah.
And so I suppose that the final two questions I've got is, if I'm renting or I'm looking to become a first time buyer, is there anything I should be preparing now, Gary? Having a look at the next couple of months.
Yeah. So if I would always say to all clients, basically speak to the broker initially, find out exactly how much they can borrow, what documents they need, and get your house in order, get bank statements, get your accounts in order, get your pay slips, everything in order. Make sure get your credit report, make sure there's no blips on your credit and everything, and just get everything packaged up nicely. Go and see a broker, have a chat with them. Most brokers offer a free, no obligation consultation. So you don't have to sit and wait, go to the bank, wait 2 weeks for an appointment. Pick up the phone, say, look, I'm interested in this. This is my circumstances. What do you think I can borrow? and be realistic, agree a budget, have a budget in mind, and basically get all the info, and sometimes get an agreement in principle, so you know that you've sort of been agreed, sort of subject to full underwriting, so you're not wasting your time, you're not wasting the vendor's time and the estate agent's time, and it also puts you in a strong position, Nigel, to go and put an offer on that property when an estate agent sees somebody who's already been with a broker, got all the docs, and got the agreement in principle in place.
Well, I mean, that's a very good point, actually. Often estate agents won't even propose an offer unless you can show that you've got financing behind you, because ultimately that offer doesn't mean anything if you haven't got the money to buy that property.
Yeah.
So they're looking for some type of indication that you have got the money available to buy that property. So I suppose finally, how so in terms of a mortgage broker, how you'd help, you'd say, how would you go about helping people then, Gary?
So we basically will have a free chat with the client, ask them specific questions, we'll give them a quote. Like once we've got some information, we'll give them a quote, say, look, this is potentially the costs associated. Everything's upfront and transparent, so they know exactly what they want. Then if they're happy to proceed, we'll get the pay slips, the bank statement saying, proof of deposit and everything. We'll get them agreement in principle if they're happy, like I said, and give the authority to proceed. Then if they see a property, we tell the client, look, pass our telephone number to the estate agent and we'll qualify everything for you. We'll basically see, we've got all your bank statements, we've got all your proof of income on file, we've got your all the money loan checks and everything. And we'll act a little bit as, not just as a mortgage broker, we'll ask it, like, act as a middleman for you. So then you're not having to go to an agent and giving all the documents. We can just say, look, we've got all the documents on file, we can send a confirmation, we can send you the agreement in principle. It just speeds the process up, Nigel, and qualifies a realistic and a good candidate.
Yeah. No, I totally agree. And to be honest, Gary's been doing mortgages at our company for a while now, and he's all of our clients have had an excellent experience, and I definitely recommend you to use a broker, and especially Gary, I would say as well. So, I mean, just finally, what I'd say on this is, for me personally, I'm a little bit more bullish, I think, than Gary. Is a fantastic opportunity at the moment to get involved in the property market in the Northeast. There's ability to buy with the low deposit mortgages. The housing market's moving higher. There's lots of talk from the government about moving jobs to the north. I know recently they announced that the Bank of England are moving some jobs up to Leeds, which again, you wouldn't have seen anything like this. Jobs going to Darlington, going to Leeds, Freeport's appearing in Teesside. There's lots of stuff going on in the Northeast, and I think it's an incredibly exciting time for people. And hopefully, you know, those people who want to go from generation rent to purchasing will see this as a fantastic opportunity. I mean, Gary, have you got anything else to add at all? Or
I just think, yeah, it's a good opportunity to buy. The lenders have got the appetite to lend for the right clients, and even it's not just 95% deals we do, Nigel. We build, as you know, we help clients build portfolios for the buy-to-let and investment properties. We appreciate clients have got dips and blips in their credit file. We specialise in adverse credit as well. So, and it doesn't matter if you're on £10,000 or £200,000. People have had blips, especially over this last 12 months. So we're there to help. Hold somebody's hand basically, and get them a mortgage and give them sound advice, free initial advice, and tell them what they can and can't do. And it doesn't matter what their circumstances are. We're here to help them get on the property ladder instead of renting. And you know yourself, some people, especially down south, are paying like £2,000 a month for an apartment rent, and the mortgage would be a lot cheaper.
Yeah, no, it's definitely.
It's
definitely changing. So brilliant. Another bit of excellent news for the Northeast property market. Another excellent piece of news for the mortgage market as well, specifically. So thank you everybody for listening, and we'll hopefully see you soon.